me tell you that what we have covered already. So we were discussing managerial discretion, section C, managerial discretion. So in that we said that primarily we take three topics: revenue recognition and long-term assets and inventory. For inventory, I'm still waiting. It depends upon how fast we are able to cover the next topic that we are going to start. If we are able to cover it up and if there is some time left, then I will take inventory. Otherwise, I will see that in which way I can tell you the information about inventory. We will check. So right now, this one we are skipping, but given enough time, we would want to cover it. So I may come back to this later on. So do remember, isko abhi skip kar diya hai. What are we going to do today then? We are going to come back to our section B to once again, which is process of preparation of financial statements. If you remember, when we had done the process, so far we had done only two statements. Statement number one was income statement and statement number one was balance sheet. We said in the beginning that there are three major statements that are provided by the different organizations. One is income statement, one is balance sheet, and one is called cash flow statement. So in today's class, whatever is left, and in next few classes, we will learn what this statement is all about, why it is prepared, and most importantly, how it is prepared and analyzed. So this is going to be our topic area for next few days. Cash flow statement. So we are moving back to our step number 3, which is process of financial statement. So let's go ahead and do this. Cash flow statement. Why should I tell? You guys tell me that what should this statement contain? Any idea? Intuitively, if you were preparing a statement, what should this statement contain?
So all the in and outflow of the cash.
That's all.
That we have.
Pretty simple. All the inflows and outflows of cash. Next question. Why would you be bothered about cash? There are so many other assets also, right? We are not saying that prepare a statement of, let us say, inventory. No. We are not even saying prepare a statement of account receivable. No. We are saying prepare a statement separately of cash. Why? Is cash somewhat special?
The company need to have some liquid assets, and like to pay their like short-term liabilities, usually they need to ensure that they have enough cash for that.
Because the assets that can be used immediately for any purposes.
Yeah, these are the only assets which can be used to facilitate transactions. For example, let us say you have a very good business going on. Let's say, what is the best business I can think of? Let's say oil excavation, unless America bombs you, of course. Jokes apart. Let's say you have an oil excavation business and you excavate the oil and sell it off. The business is doing really good, but you don't keep any liquidity. Let's say you join the organization. Let's say Kaustubh got hired somewhere in the Middle East somewhere and a very fantastic salary. First month is over, no salary came in. Second month he worked, no salary came in. 3 months are over. Then what the owners are saying is that Kaustubh, you have worked really hard, but we don't have cash as an asset. Why don't you take these 3 barrels of oil in terms of salary? What do you think he is going to do? Maybe he'll wait for 3rd month, but by 4th month, 5th month, he will want to pour that oil back somewhere and do something. Basically, the point is that you cannot do transactions in any other asset except for cash. So this is the life-breathing oxygen for the organization, without which even a healthy organization may die. So if you remember our accounting equation, that in accounting equation we had, let's say, all the assets this side and all the liabilities this side. So in the assets we had cash, we had inventory, we had account receivable, we had land and so many other things. In the liabilities we had capital, we had retained earnings, we had loan, we had accounts payable and so on and so forth. What we are saying here is that in accounting equation, if we look at all of these totals, this is what our balance sheet is. All these total itself are our balance sheet. So we have a statement which gave us a total of all the assets and all the liabilities. Apart from that, what we have already seen, we have seen one more column separately in detail. What happened to all the pluses and minuses about retained earning? For this, we were like super interested, that I'm not that much interested in what lands plus and minuses are happening. but I'm super interested in what reasons because of which retained earning is getting plus and minus. We call that statement as income statement, all the income and expenses. Now we are saying that there is one more area of interest that we are very keenly interested in, called cash. So for this also we need a separate statement because of its peculiar nature, and this statement is going to be called as cash flow statement. So these are the three statements. Two of these you have already seen, and this is what we will see today. So let's go ahead and start. Cash flow statement, as somebody mentioned, that cash flow statement simply contains where cash came in from and where it went. My question is, we already have this statement, right? We have this information somewhere, where cash came in from and where it went. Can anybody guess where do we have this information?
Cash account.
Cash account, yes, cash T account. If you remember, cash T account, what did it contain? In the debit side, it contained all the pluses of cash. In the credit side, it contained all the minuses of the cash. Then why spend 4 or 5 lectures of your precious MBA curriculum in learning a separate way of doing this? You already know where cash came in and where it went out, right? Why don't companies simply give T account of cash, cash T account? Any issues that you can think of it will bring if instead, let's say you wanted to know about cash position of Tata Motors, and what Tata Motors did is it gave you its T account of cash. Any issues you think you may face? Question समझ में आ गया? Yeah, go ahead, Amar.
Actually, we wanted to know from which activity the cash is coming from. So it can be an operating activity.
तुमने तो पढ़ के आए हो इसलिए this is cheating.
No,
I am
sir.
asking just common sense answer. Okay, fine, that's good. Amar, you are right, exactly. But I'm
Sir.
trying to avoid the jargons. Yeah, go ahead.
Can you repeat the question?
My question is that you wanted to know more about cash, especially where cash came in and where it went. My counter question to the class is that we already have this information ready-made available to us. When we were preparing our income statement and balance sheet, somewhere we would have prepared cash T account. My point is that cash T account already contains this information. Then that should be sufficient, right? Just give cash T account to everybody. My question is that if, let's say, you wanted to know about cash position of Tata Motors and they gave you cash T account of their entire year in front of you, would you face any issues in trying to understand this?
Sir, we need the cash position of previous years as well, right?
Okay, 2 साल का दे दिया, ले लो भाई. और बताओ, 1-2 साल का और पहले चाहिए तो वो भी दे देते हैं. So he is saying, Aditya is saying that I want to compare. So if you want to compare, let's give it to you for 2 years, fine. Yeah, go ahead.
Probably we don't have the reason like why where we are using the cash or something.
Okay,
it's like why we which similar to why we use the
basically what
revenue
is mentioning is that if you have only pluses and minuses, you wouldn't get the reason. Let us say I have all the reasons also. So salary paid to Mr. X, salary paid to Miss Y, or whatever. Sales made 1, sales made 2, sales 3, sales 4, everything is there. Yeah, Nupur, go ahead.
So, but we cannot compare here, no? That which from where which is performing good in terms of cash inflow.
In what terms you can't compare? You can compare this to the previous year, right? Okay. Okay. Let's see, Sayam. One more, 2 more responses, and then I tell. Sayam, go ahead.
Sir, maybe this account does not tell when we're doing well in cash, at what time.
Time, okay. Time is okay, fine. Let's see. Time is can also be given, right? Okay, fine. Anything else, Kaustav?
So we might have more liquid accounts, like maybe current account, bank current account or so.
Okay, that's not it. Basically, if somebody gives a cash T account of Tata Motors, remember when cash T was getting affected? Every time cash was coming in and moving out, we were making an entry and we were putting it in cash T account. So forget about a big business like Tata Motors, even like a small Kirana store or small furniture store, a cash T account will have hundreds and thousands of entries. Now you have all the information, but do you have it in a summary format to process it? what max you could get. At max you could get that, okay, total this much cash came in and total this much went out. But let us say somebody tells you that cash position is dwindling. Can you control this? Can you control anything? That where are you losing cash? What is happening year after year? Basically, this information, even though it is sufficient, it is not in a summary format. Why do we want it in summary format? You would have already seen that even for a big businesses like Tata Motors, the income statement was just one page and balance sheet was just one page. Does it mean to say that they had income just in 5 headings and assets and liabilities in just 5-6 headings? No, basically it is provided to you in a summary format. Unless this much summarization is done, you will not be able to process the main headings because of which the business might be doing good or bad. Whenever you want to take a decision, you want to understand the information in a summary format so that you can look at the trend. For example, let us say somebody tells you that inventory has been going up over the past few years. Let us say you look at the trend that account receivable have been falling down. Then you can talk about these balance sheet numbers. But if instead they say that account receivable in the last year was from Mr. Y, then account receivable from Mr. S, then account receivable for Miss A, whatever, then you can't track individual account receivables, right? So basically what we need the separate information is because we want to know it in a summary format. Now, how do we provide a summary of cash flow? Basically, this summary will be provided under 3 major headings. These 3 major headings, as somebody was trying to mention earlier on, is once again introduction of 3 jargons. These 3 major headings are called cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. Basically, this is what we are after. That we want to know where cash came in from and where it went, but now we want to know it under operating activities heading or financing activities heading or investing activities heading. Basically, we have 3 major buckets in which we want to understand what happened to cash. Now, fortunately for all you non-finance background people out here, the word operating, the word investing, and the word financing have their dictionary meanings. So no special meaning. Whichever way we use it in our day-to-day life, that's what they stand for. That whether you are generating the cash from your regular operations, or you have invested it somewhere, or whether you have financed your business from somewhere. That's what we want to talk about. I will explain that what all gets included in CFO, CFI, and CFF. But before that, let me give you a format of cash flow statement. That how does the cash flow statement looks like? This is how it looks like. Pretty simple. That we will say that this is our cash flow statement. We will have cash flow from operating activities, something. Then we will have cash flow from investing activities. Let's say the total of cash flow from operating activities is here. Cash flow from investing activities. Let us say some of the investing activities are here and the total is here. And cash flow from financing activity. Let us say some of the activities are here and the total is here. If we add all of these totals, let's say total of A, B, and C, then this total is what would be our total change in cash during the year, during the period. It can be year or anything smaller also, not at all a problem. That I got or lost cash because of my operations this much, I got or lost cash because of my investing activities this much, and I got or lost cash because of my financing this much. So A plus B plus C would be my total change in cash during the year. If to this change I add my opening balance of cash, that is what cash I started with, what should I get? This is what I generated in this year. If I add to that where I started from, what will I get? Any idea?
The cash in balance sheet.
Net cash.
Cash in the balance sheet, the closing cash. Closing cash will be the ending value. Let me give an example. Let us say in this year, you totally you generated 50,000 of cash, and to begin with itself you had 1,10,000 of cash. When you started the year, the beginning cash was 1,10,000, and in this year you generated total 50,000 of cash. Now, can I say that what this 1,60,000 is? This 1,60,000 should necessarily match with our closing balance of balance sheet cash. That this is what we would be left with. So this is the format of cash flow statement. This is the format of cash flow statement. We have CFO, CFI, CFF, then its total is called change in cash. If we add opening cash to this, then it matches with closing cash, and this total is the format of cash flow statement. ठीक है, यहाँ तक समझ आ गया?